So today's Tuesday, the 26th of April. So as usual, we're focusing on the Euro-US dollar during this 2-week session. So we're just focusing on the Euro-US dollar. The key is just to learn how to trade well, how to develop a plan, how to use money management. In the market we're looking at. So like I said, today is Tuesday, the 26th of April. So we'll just look for reports that are coming out from the Eurozone and America. And when reports of medium and also reports of high importance. So we can see here at 2 p.m. These are GMT times, which is an hour behind UK times. So at 2 p.m., which is 3 p.m. our time, we have the U.S. Consumer Confidence Report coming out. That's a report of high importance. So that's a report that we really aware about, because as we know, the market tends to trend sideways prior to reports of high importance coming out. Again, I'll never tire of saying it. You don't use the words never or always. There are no absolutes in the market. You know, the market will do what the market is going to do. There are no absolutes. So you always use, you're always looking at things that happen, more frequent basis. So you can use words like this. It's likely to, tend to, but don't use absolute terms in trading. So the market tends to trend sideways prior to reports of high importance coming out. So with that in mind, we have to trade carefully prior to this report coming out at 3 p.m. UK time. If you're an extremely cautious trader, you probably just get to after the report is announced. I usually place one very cautious trade prior to reports of high importance coming out. So I'll also be sending out a webinar invitation. We'll meet again. We'll still meet at 12 as normal, and then we'll meet again at 10 to 3. Just we'll start the session 10 minutes before the report comes out at 3. So you all get shortly after the session. So with that in mind, as you can see, there are no other reports of relevance to our markets after that one. So the main one is at 3 p.m. UK time. So with that in mind, we're going to tread carefully, approaching the markets. Like I said, if you're a very cautious trader, you just keep out completely. You just switch off, go and do something else, and then just come back at 3 o'clock where we announced, and then place your trades there if you're a very cautious trader. But like I say, I place one cautious trade prior to the report coming out. Okay, so with that in mind, we go to our charts and see if we have any swing trading opportunities and then day trading opportunities. From a swing trading point of view, we can see the market has, this is the 1-year daily chart. We can see the market has been trending upwards. It's been trending comfortably above the moving average 50, which is the black line. And I usually use the Fibonacci retracement and the moving average 50 as my entry point in the market. So from a buy point of view, you can buy when the market gets to the 0% retracement. As you can see, that's, as you can see, the moving average 50 is now approaching the 23.6% Fibonacci retracement. So we can sell around the Fibonacci retracement, but you still make sure your sell order is just below the 50 moving average 50. So always remember average 50, you buy above it. So our sell order will be just below the moving average 50, but if in a couple of days' time the moving average 50, is now above the Fibonacci retracement, you can then just place your sell order just right on the Fibonacci retracement. So those are potential swing trade opportunities, but as you can see, the market is not close to those points of the market yet. But those are the points we'll be watching for possible swing trading opportunities. The 23.6% Fibonacci retracement, moving average 50, and we'll see what happens if it reaches those points within the 2 weeks. But for all intents and purposes, it's an uptrending market. So from a day trading point of view, we'll go down to the 2 days, 5 minutes chart. And as we can see, the market fell last night, broke the pivot point, came down to the first support, broke the first support, and it's gone back up, and now it's just trending sideways along the first support. We'll just mark the high of the sideways trend, put our cursor over that candlestick, which is the high point, which is 14.544. Oops. And that's the low point there. That's 14.493. Okay. Okay. So as usual, we want to avoid trading in a sideways trend, and you can see the first support is right within the sideways trend. So for now, we'll avoid using the first support. And obviously, we also have to remember that there's a report of high importance due out at 3 p.m. today. So with that in mind and us trying to be extremely cautious, we're just going to keep out from this section of the market. Obviously, the whole pattern of the charts might change at 12 and also before the report comes out. But at this point in time, the only safe place to place our trade will be to place a buy order just above the pivot point. And we can see the pivot point here. Pivot point level is 14.577, so we'll put our buy order at 14.5. So we'll be happy to place a buy order just 2 points above the pivot point. So that's where we'll place our pending buy order. So if the market keeps going sideways, fine, we'll keep out of the market and we won't place any trades and see what happens at 3 o'clock. But like I said, we'll meet again at 12. Obviously, if the market falls, there are no clear sell opportunities because you can see the first support, because we usually use the pivot points, the first support is clearly within the sideways trend, so we want to avoid using that because one, it's within a sideways trend, and two, there's a report due out, so it doesn't make sense trading there. It's a very, very risky trade. We're only looking for good trading opportunities. And obviously the market hasn't even formed a support. So if there was like a support in the market itself, we could have potentially used that. But that's the low of the market. It hasn't been tested, so it hasn't formed a support. The high too hasn't been tested, so it hasn't formed a resistance. So it's just best to keep clear of that area, and then we'll see what happens and see how the market develops. So at this point in time, the only clear trading opportunity would be to buy just above the pivot point. Any questions on that? Just going to save that and put that on the blog. If you have any questions, do click the hand button or send the question through the question box. Like I said earlier, we're also going to look for option trading opportunities, and then afterwards we'll talk about how to use your trading platform and set up your charts. And then we're going to talk in detail about how to use pivot points and the moving average 50. Okay, so if we're all happy with that, we'll go on to option screening. If you've got any questions at any time, do go ahead and ask. But remember, the sessions are all on the YouTube channel, so you can watch the sessions there, and also the blogs, you get the details of our trades on the blog. So always remember, you can go to the blog or the YouTube channel to catch up on what we've been doing. Okay, so we'll go to options. Those are the options trades we have so far. We've got 1, 2, 3, 4, 5, 6 options trades, and we'll see how they go. So we're just going to go to the chart and see if there are any opportunities with the stocks we have on watch list. As we know, the broad market, which is the Dow Jones, is uptrending. So we know we're going to be looking for call opportunities. So we're going to go to the watch list and just look for stocks that are going to fulfill the criteria for placing a call. So we're looking for uptrending stocks, which are stocks that we're looking to possibly place swing trading opportunities, possibly place option trades on. So we'll start with a pool. You can see it's trending sideways, so we only want clearly uptrending stocks. So we'll just quickly go through the list. Okay, that's beginning to uptrend, but you can see it's not oversold. That's downtrending. Oops. That's downtrending. You can see that's beginning to go sideways, so we'll ignore that. We only want clearly uptrending stocks. That too is trending sideways. See, that's beginning to trend down. So we only want, now this is an uptrending stock. So you see it's trending up, but it's not oversold. We want to wait for the blue line to get to the below minus 80. So it's not, but not oversold. That's downtrending. Okay, that's uptrending too, but it's not oversold. That's beginning to trend up, but we already have an option trade on this stock. That's uptrending, but this is a stock that we're going to place an options trade on it, but because it started to fall in value, we abandoned the trade. So this was an options trade we abandoned because the value of the stock did not continue to rise on the day we went to place the options trade, so we abandoned that trade. That's trending sideways. Okay, that's trending up. So we just have to wait for it to become oversold. That's trending sideways. That's trending up. And we already have an options trade on that stock. And that's CSX Corporation. You can see it's trending down, so you can't use that one. We really want clearly uptrending stocks. Okay, that's trending sideways. That's trending sideways. Yeah, that's trending up, but it's not oversold. That's trending up, but it's not oversold. That's trending sideways. Okay, now it's trending up. That's another stock too. We're going to place a call option on value of the stock started to fall, so we abandoned that trade. Okay, so that's trending up nicely, but it's not oversold. That's trading up too, but it's not oversold. It's trading up nicely, but it's not oversold. And you can see that's trading up very nicely, but it's not oversold. It's trending sideways. Let's begin to trend sideways. And last one, that's trending sideways. So there are no option trading opportunities today. We'll just check every day. So we'll just stick to the current trades we have, and we'll see what happens to them. Okay. Any questions before we then look at the trading platform and talk to you how to use pivot points? Okay, so we'll go straight on to the trading platform. Let's go on. Okay, I'm just going to show you how to use your platform and place your trades. Okay, so we've got the trading platform here, and this is mainly for beginners. Now on here you have your platform, you have your finder box which shows you the instruments you can trade on IG Index. You've got indices, Forex, commodities, your watch list. These are your pending orders called the working orders. And to create your watch list, what you need to do is you come down to the bottom of the finder box and click on new watch list. And then you can name your watch list. His name is Mr. Smith. Or you can give it any name you like. And then click submit. And then that comes under the watch list. So if you scroll down, you can see, look for your new, that's it, Mr. Smith. Like I say, you can name it whatever you like, because I have a watch list for indices. I have a watch list for Forex. I have a watch list for commodities. I have a watch list for stocks that I watch. So, you know, you decide how you name your watch list and how you populate it. I don't have a watch list for ETF. So let's go to Mr. And then under Mr. Smith, if I just select Forex, which is what we're watching over the next 2 weeks, and then under Forex you go for the spots, and then under spots you go for major FX. It's really the major FX you want to trade, and we'll look for the market you're interested in is Euro US dollar. So you click on the drop down menu there, and then you select add to watch list, and it tells you which watch list you want to add it to. So we'll select Mr. Smith and click submit. There we have Mr. Smith, the watch list there. Now when you have a trade, a watch list on and a market in your watch list, you always have a drop down menu here. The drop down menu of what you can do with that market. So you can see the Euro US dollar here. If you click on the drop down menu, you can see you can bring up a deal ticket, you can bring up an order to open ticket, an advanced chart. So there are the options you can use. Usually when you want to trade, you can either bring up a deal ticket. Now with this deal ticket, it gets you straight into the market. So you put your number of contracts, your stop loss and limit, and then once you click, buy or sell, you go straight into the market. But I don't recommend you use this deal ticket, because I always recommend you plan your trades so you don't just jump into the market. So to do that, you click on that drop down menu and you select the order to open option. So you click, and that brings up your order ticket, and then you can then fill the ticket as we did this morning. So like we said this morning, we went to buy just above the pivot point. So you click direction to buy. If you want to sell, you click on sell. So we're going to buy. It says what level do you want to buy. So as you said, we're just going to buy 2 points above the pivot point at 14579. So we're going to buy 2 points above the pivot point. Then it asks you what size of contract do you want to trade with. Like I said, I always advise beginners to start with 50p per point. So you put there 0.5, which is in a sense 50p per point. Obviously, if you're trading with 3,000 and above, you can go with 2% of your capital per trade. But for beginners, just to make it easier, you just stick with 50p per point. Then you go down to the next box here, it says stop. So you put your stop loss of 20 points. So you're only risking 20 points. We always risk only 20 points per trade. So if you're risking 20 points at 50p per point, then you're only risking £10 per trade. And that's the key to trading, is money management. You always want to risk a small portion of your capital. And like I said, for beginners, you start with £100, and then that way you're only risking £10 per trade. So at least you'll get to trade 10 times before you blow your account out. But as you will see over the 2 weeks, if you trade well and plan your trades well, it's very unlikely, extremely unlikely that you will blow your account during those 2 weeks. If anything, you will gradually increase your capital. So you use a stop loss of 20 points. You always trade with a stop loss, because you're never sure which way the market is going to go. So you put a stop loss of 20 points there, and then and also you should always have a limit. Never plan a trade without an exit strategy. You always have to be clear when you're going to exit the trade, either when you're losing money or even most importantly when you're making money. And you have to always make these decisions prior to placing your trade. So the one I always recommend is the 1-to-3 risk to reward ratio. So if you're risking 20 points, using the 1-to-3 risk to reward ratio, you want to go for 60 points. So your profit limit will be 60 points. So you're going to, for this trade, you either lose 20 points at £10 or make 60 points or £30. That's just So because it's 50p per point, so 50 times 60 will give you £30. So once you've done that, you just click submit, and you can always check, make sure you filled out the ticket correctly, and then you just click submit. And when you click submit, you'll see your pending order in the box there. So you've seen, just like mine, we've got the pending order there. You can always check your US dollar amount, one contract, stop 20, level at which the market will take your order, and your profit limit. Okay, then just have your open positions. Open positions shows your live trades, and with your live trades, you can then see whether you're making or losing money. And also with your pending orders, you also have the drop-down menu there. So if you made a mistake with your pending order, you want to edit it, you click on Edit Order, or if you want to move your order, you can click on Edit Order, and then you can edit your order level, and you can edit your stops and limits. And also if you want to cancel the order, you can click Delete, and you can cancel the order. So you always remember the drop-down menu gives you the options of what you can do. And it's the same when you have a live trade on. You can click on the drop-down menu. Again, you can edit your position. So if you want to edit your stop losses, you can click on Edit Position, and you can edit your stop loss level. So you can edit your level, you can edit your stop loss level, you can edit your limit level. So always remember, this is where you can decide what you want to do with your trades using the drop-down menu to edit your positions. Now, to actually set up these boxes, let's just delete all of them. So just delete all of them. You could do that if you log into your IG Index account for the first time. You can first remove all the boxes, and you can see all the options you have at the top of your platform. So the first is the Finder box, which gives you the list of markets you can trade, like we said earlier. And you can move the boxes. So if you just click and drag it, you can move them around. You can expand it if you want, and you can, make them smaller if you want. So you can play around with it and make it suit your computer or your laptops. I like to have my Finder box at the corner there. Then you've got the watch list. Again, you can move it around, and I prefer to have my watch list at the top. So you can then have the markets you're trading in your watch list. Then your walking orders. Again, you can move them around, and same too, you can resize them. You can drag it up or drag it down. So you can, configure it to suit your laptop or your computer. So I usually have the watch list at the top for the markets I trade. Then the walking orders, which are the pending orders, next box, because it's always good to see what orders are pending. Because we trade by planning, having pending orders, it's very important to have that there, because if by the end of the day the market hasn't taken your order, you want to remember you have pending orders there so you can delete them before you close trading for the day. Otherwise, you might have a pending order hanging around that you don't plan it to be hanging around. And then the last box you want is your open positions. And obviously that just shows you your live trades. So once you've configured your platform to suit yourself with your Finder box, watch list, walking orders, and open positions, you go to Layouts button here, you click on that, and then you click on Save. So that way you can then save your layouts the way you like it, and then anytime you log in, that's how you have your layout come up. Okay, so let's just go to the charts. Now, to bring up your charts, the best way to bring up your charts is to go through using this toolbox. So if you click on Tools, it brings up this box, and under there you just click on Advanced Charts. So we'll start Advanced Charts. It's taking a while to load up. Okay, so here we have our Advanced Charts. When you first bring up your charts for the first time, you might see a lot of things all over the place. Sometimes this is the control panel, this button, this box called Advanced Charts. It's more or less your control panel where you have this file button where you can save what you've done, a display button to give you the lists, objects, help, options you have on your chart, templates. So it's more or less the nerve center. Sometimes when you log in for the first time, you might see it take up your whole screen like that. So again, you can configure it to suit yourself. So all you just need to do is see the top bit with all the icons you need to use for your trades. Then we have the list. Sometimes the list is not there. You can go to the, again, control panel, you go to display and then click on lists, and that brings up the list of markets you can bring a chart up for. Usually you'll find that they've done a good job with their platform now, that once you've created your watch list on the platform, like we've created our watch list here for Mr. Smith, it automatically shows up on the list here. So if you click on the drop-down menu here, you can see Mr. Smith. It's already there. So once you've done that, you bring up your control panel, bring up your list. You've got Mr. Smith. Then if there are any charts up there, you just delete them by going to the red button to close them. So you can close the chart. So but don't, like it says here, don't close this window while you have your charts up. So we just got the Advanced Chart button there and the list. So that's what you want if you're first time. Now to bring up your charts, you can either click on the icon, this chart icon, or you just click on the market itself, and that brings up the chart. Now when you bring up your chart for the first time, let me get rid of, just want to get rid of those trades. Okay. Now, when you bring up your charts for the first time, we'll start with the 2 days time, 2 days, 5 minutes. We'll start with the day trading. This is what you will see to start with. You're not going to see the Fibonacci retracement. I'm just going to show you how to add this indicators to your chart. So we'll start with the 2 days, 5 minutes time frame. Just delete all these indicators. Okay, so when you first start with, you see a blank chart like that. So we'll start with 2 days, 5 minutes, and you can see the time frames at the top of your chart. So 2 days and then 5 minutes. That's what we use for day trading. So 2 days, 5 minutes. So you can drop your chart down to that time frame of 2 days, 5 minutes. Now once, let me delete that too. Okay, so that's what you get. Sometimes, if you already have the candlestick on your chart, then that's fine. But sometimes, if you don't have a candlestick shown up in your chart, this is the icon to add your indicator. So it's here on the top of the chart. You just click on that, and it brings up the list of indicators you can apply onto your chart. You can see there are so many indicators there, but we're not going to use all of them, obviously. So start with price. Click on Add Indicator. Let's first go to points. So sometimes this is what you call a virgin chart. So you can see there are no indicators on this chart. It's just time and price. So time and price. So every time there's a price, you just see a dot, dot, dot on the chart. So this is just a plain virgin chart. And as you can see, it's going to be very difficult to interpret this chart to look for trading opportunities on this chart. So there's, anything that's added onto this chart, anything other than time and price, because this is what I say, a virgin chart, time and price. You just said time and then you get a price on a dot, dot. So if you add anything other than this to your chart, it's called an indicator. Anything else other than time and price on the chart is an indicator. So like I said, the first indicator you want to apply to your chart is the candlestick. Sometimes the candlestick is already there as a default indicator for your price patterns. But if it's not there, then you need to add the indicator. So again, we'll go to the indicator icon at the top. Select price and click Add Indicator. And then you can see the star here gives you the options. So you can see histogram, points, bar charts, candlesticks. So it's candlesticks we want. So you select candlestick and then close. So you can see it's come up with the candlesticks. So we can now delete this one. So you just click the X box there, and then we've got our chart with the candlesticks. So that's the first indicator you want to use, and it's good to read on candlesticks because it tells you a lot of information about the chart, knowing about candlesticks. So the next indicator we now want to add to our chart is the pivot points, because that's the one we really use a lot for day trading. So to add pivot points onto the chart, we'll go again to our indicator button at the top of your chart. So you click on that. Then we'll look for pivot point and price. So you scroll down to P. There you go, pivot point and price. It also tells you how the pivot points are calculated. So there's a bit of information there on pivot points. You click on Add Indicator, and you can see it just adds it automatically onto the chart. Then close. So you can see it's added automatically onto your chart. And then the last indicator we want to add to your chart is the moving average 50. So again, we'll click on the indicator icon. Usually the moving average is at the top because it's a very common indicator. Virtually everybody uses moving averages, so that's why it's at the top. So click on moving average on price, click on Add Indicator. You can change the color if you want. You can just right click on the color trend. I usually just use black. But you can decide to have one color for uptrend, one color for downtrend. You can use all sorts of colors you want. You can pick, I just use black. You can make it bolder at the width. And you can either have a broken line or straight line. I like a straight line. Now I use moving average 50. So you change that to 50, and then that goes. And there we've got the moving average 50. So those are the two main indicators we'll be using for day trading. The pivot points and the moving average 50. Now once you've done that and you've added your pivot points, you've added your moving average 50, and you're happy with your chart, again you go to the control panel, the advanced chart control panel. Then you click on the file button, and then you click on save, because that way you then save what you've done. So anytime you bring up your charts, that's exactly what will come up. So you don't have to keep doing that all the time. So once you save it, anytime you bring up your charts, as you saw with my own chart, all this comes up. Now, how do you use pivot points? And that's the main thing. Now, pivot points is a very well-known indicator. It's more traded at the stock exchanges. And because it's a very common and widely used indicator, it becomes like a self-fulfilling prophecy. And it's strictly used for day trading. So you can see it's just a 24-hour indicator. You can see it only lasts from midnight to midnight because it's calculated from the previous day's trading. You use the high, the low, and the close from the previous day to calculate the pivot points. And it's just for 24 hours, so it only lasts from midnight to midnight. But the good thing about using the pivot points is that it's a fixed point in the market. It doesn't change. So it's, as you can see, you can plan your trades, place your orders, and then just walk away because that point in the market does not change. But again, remember, at the end of the day, if your order is not taken, you should delete them because at midnight, all these parameters will change. It's only used for day trading. It's a 24-hour indicator. Now, the black line here is the pivot point itself. When the market is above the black line, it's regarded as being bullish or going up. And it will keep going up until you get to the first resistance. When it gets to the first resistance, the market can either hit it and come back down or and go up to the second resistance. Again, you can either get there, hit it, come down, or break through it, and just keep going all the way up. Alternatively, if the market is below the pivot point, it's regarded as being bearish or falling or going down. And as you can see, the market can either keep going down, get to the first support. It can then break the first support, keep going down. Or like say, it can get to the first support and go back up. If it breaks the first support and keeps going down, it can get to the second support. Again, it can get there and bounce back up or break through and just keep going all the way down. Now, the way we now use the pivot point to trade is that since you know that's how the market can move using the pivot points, as we can see here, you could have sold just below the pivot point. Because you know the market breaks the pivot point, the tendency is that it might fall all the way down to the first support. So you can sell just below the pivot point if the market is falling, as you can see here, and then follow the market down. And depending on your exit strategy, 60 points or the next line you can come out. So you can sell just below the pivot point if the market is falling. If you miss it there, you can sell just below the first support. But if you miss selling just below the pivot point, the best place to trade will be around the pivot point. The next best is the first support or the first resistance. So if you miss selling at the pivot point, you can sell just below the first support. But if you miss selling at the first support, you don't use the second support to trade because by then the market is overextended. And it tends to, again, you don't use absolutes in trading. It tends to then go sideways by the time it gets to the second support. So in terms of risks, the best place to sell or trade is the pivot point. If you miss it, the next best is the first support. It's riskier than the pivot point, but it's still acceptable to use. But this is very high risk by the time it gets to the second support, so we don't use that. And on the way up, if the market is trending up, as we've done this morning, if it's going up, then if it breaks the pivot point, we're happy to buy just above the pivot point. And then if you miss buying at the pivot point, you can buy just above the first resistance. But if you miss that, you don't use the second resistance to trade. But over the 2 weeks, we'll show you how you can use the pivot points in different scenarios and in different ways. Because you always have to remember sometimes the resistance can become a support, and a support can become a resistance. So, but we'll show you that over the 2 weeks, how to apply that, when to apply that. Okay. So that's pivot points. But obviously, knowing how to use the pivot point, you still have to remember the other things we spoke about this morning, in terms of, or like yesterday being a public holiday, so again, you still have to be wary using it. You don't trade in a sideways trend, so you can still, the first support is within the sideways trend. So you still have to remember little things like that and apply it to your trading the pivot points. And then also using the moving average 50, because we use the moving average 50 to identify the trend of the market. So you can see here when the moving average is going up, the market is going up. When the market is going down, the moving average goes down. When it's going sideways, you can see the line is just going sideways. You can see here when it's falling, the moving average too is falling with it. So it tends to identify the trend of the market. And again, the key to trading is the trend is your friend. So you want to trade in the direction of the trend. So again, I use the moving average 50 as a guide to make sure my order or my trade is on the right side of the market. So as a golden rule, I always say, you buy above the moving average 50, you sell below the moving average 50. So if you have an order, if you have a pending buy order, it should be somewhere above the moving average 50. And if you have a pending sell order, it should be somewhere below the moving average 50. So that's the key. So you always have to make sure. This is just one example. So let's say, for example, you want to buy here just above the first support, because like I said, a support can become a resistance, because when the market, you can see here, when the market fell below the first support, it's now, this first support is now a resistance because the market at this point is below the first support. So this is now a resistance, and you can use it to buy. But as you can see, the moving average 50 stayed above the first support. So you can't have a buy order there because the buy order will be below the moving average 50. So again, use that as a guide. So you want to place, this is just for educational purposes. Again, always remember the golden rule, don't trade in a sideways trend. So I'm just using this for as an example. So let's just assume the market was trending up nicely and there was no sideways trend. You still would not have placed a buy order there because it will be below the moving average 50. Because again, the only thing that should be below the moving average 50 should be a sell order, and the only thing above it should be a buy order. Okay. Any questions on that?